Whenever you're ready, buddy.
Give me a minute, Ernest. Taking in the views, man. If you're gonna come to Brooklyn, I mean, it's the architecture, it's the art. If it's not the restaurants or the kids playing in the playground, it's something. I mean, you have it all out here, man.
That's right.
I can see the allure. I don't know if I want to buy a house, open a shop, or record a rooftop video, but I want to do it all.
That's right,
this
man.
This is a great neighborhood, man. I love it. I love it out here.
Oh, man, great to see you, man.
Thank you very much.
Thanks for coming out here. I appreciate it.
Thank you, guys. Thank you for joining us.
Absolutely.
Ernest and I would like to, speak about the Brooklyn market. And we understand it's pretty difficult to get into it, is it not? I mean,
terribly. Yeah.
We're finding that, if you want to get in here and you're looking for your first home,
yeah,
it's actually,
especially for first-time home buyers,
pretty difficult.
Yeah, I think for first-time home buyers, it's a struggle. They're competing against some pretty big fish out here.
Yeah.
The investors, the developers, and then all the other home buyers that are coming into the market right now.
Yeah, guys, we want to talk about all of these difficulties. Whether you're competing against investors or second home buyers or upgraders or downsizers, you want the best chance to buy a house. And Ernest, being the Brooklyn's best, Brooklyn's finest, with the Ernest Hill team at Hempstead, right? Helping you find real estate.
That's right, yeah.
And myself representing United Mortgage, helping you with your finance needs and your options. Right. Between the two of us, we can help you and we can show you a way. But it's not without planning. And it's definitely not without strategy.
Yeah, absolutely, right? Absolutely. I think there's some interesting facts that I just kind of want to put out a little bit about what's happening in Brooklyn right now. And a lot of people I don't think are paying attention to it. This year alone, we're up 64%.
Wow.
From last year in foreclosures.
That's tremendous. It's huge.
It's crazy. In fact, in New York City as a whole, there were 920 foreclosure auctions that happened this year.
Wow, that's amazing.
All right, and that's just in quarter one. 275 happened in Brooklyn.
That even sounds almost like an epidemic. It sounds like there's enough people losing their homes. That also creates opportunity for others.
Yeah.
But in my mind, it sounds like it creates a lot of opportunity for investors, right?
Absolutely.
So what we hope to gain today is to inform you all about the options for those people who are not investors, who are not hedge fund companies, that don't have millions of dollars behind them to help them buy a home, to show the homeowner and the first-time buyer that there is a chance for you to buy in this neighborhood, but you have to know what to look for.
Right.
So what we'd like to do is we'd like to identify some of those things. And guys, be sure to check out some of our related videos, because we're going to make sure that we focus in on some of these key points so that you can reference back to things that matter to you. So let's talk about some of those first things that really matter to that first-time home buyer, right? What are those key terms and those topics that everyone's after?
Foreclosures, REOs, short sales.
And
that's the number one question that I get when I get my phone. My phone rings. Do you have foreclosures? Do you have short sales? Do you have REOs? That's what I'm getting. What about you?
And what I think, I get the same thing. And right away, my mind goes to, I want discount property. Right? As if to say,
that's true,
I
right?
want a foreclosure, I want a short sale,
Right.
I want a cheap home. So does everybody. Everybody wants to get a cheaper house or get a house for a great deal.
Right.
And that exists.
So let's define that for the people. Let's
Sure.
define the REO. Let's define the short sale. Let's define the foreclosure. And let's talk about the pre-foreclosure. A lot of people don't understand what the pre-foreclosure is all about as well.
Sure.
So you want to talk a little bit about that?
Yeah, well, my world being banking, we can speak about REO, right? Real estate owned. The schedule of real estate owned by a bank means the property that they've already taken back from the customer. So now the customer, the owner, is now no longer in the picture. The bank who foreclosed on these homes now possesses the property, and they're looking to get rid of them at a discount.
Right.
That's a very different market than someone who's in a pre-foreclosure. Right? A pre-foreclosure customer is someone who's actually experiencing foreclosure, maybe 2 or 3 months behind in their home, but the bank has not been involved yet.
Right.
Matter of fact, a good little tidbit for you guys to know is that in the state of New York, it takes 1,001 days before a bank is legally allowed to foreclose and take your property. But foreclosure begins 90 days late on your mortgage. So you have from the point of 90 days to 1,001 where you're not making payments as a seller, but you still are in control of the deal. Finding that home is really key, right? Finding that home is essential. Someone who's no longer making payments, they're eager to sell their property, and the bank is not in control just yet. If we can help people to isolate and find those properties, that's going to be one of the first things that we can help them with.
Right.
It's going to take them out of that competition.
Right.
Let's talk about the foreclosed properties. They actual gone through the process. They've already lost their home, and what that means in the marketplace. So, when there is a foreclosed house, what does that mean in real estate world?
And the foreclosed house in real estate world, it's done. It's over. It's already going to the auction house. So at that point, the only way to buy that property is to go to the auction house, cash in hand, and say, I want that house, all cash. And some of it's sight unseen as well.
Yeah, I mean, so most of the auctions are sight unseen.
Most
right?
of it, that's right.
You
You're
get a
right.
list.
Most
You get
of
a
it.
you get a list of properties,
List, yep.
and you get to make a bid on that house.
Right.
And you better have the money ready.
That's it.
What about the properties that those investors don't have the money ready? They're not sight unseen, and they're not ready to purchase a foreclosed property. What happens to those homes?
Well, at that point, the ones that don't sell at the auction is what you're talking about, right?
That's right.
They're going to REOs, all right, which is the bank now owns that property, all right? And now the bank, they don't want to hold on to property. Banks don't want to hold on to property. They don't make money that way.
That's right.
So that's another opportunity for a lot of investors as well to try to pick up those properties.
So the key here, right, if I'm hearing you right, and I want to be really clear here, once the property is foreclosed and taken over, investors are going to come in and gobble it up at auction. Those that get left behind means to say that the investors don't have an interest for one reason or another. And I would assume they don't have an interest because there is not a gap large enough in the price that they can acquire the property and then a price they could sell it at. You see, an investor, right, if we all understand investing in real estate, you buy low and you sell high.
Right.
What happens when you can't really buy that low? But the house is certainly worth it. The neighborhood is worth it.
Well, that's the opportunity that we're talking about.
Exactly.
So, Christian, we
Talk to me.
defined already what the REO process is. We've talked about the foreclosures. We talked about pre-foreclosure, short sale. We've talked about that. These distressed properties are there, right?
That's right.
Now, I'm a new buyer. I'm a first-time home buyer. I'm ready to buy a property. Now I know that these opportunities are available to me because I can get a loan and I can actually purchase these properties. But how do I do that? And how does that work? And where do I begin? What's the starting point for me as a first-time home buyer?
That's an amazing question. I think that I relate buying a house really similarly to buying a vehicle, right?
Yeah.
The first thing a buyer wants to do is they want to see a home or a car. They jump in the driver's seat. They test drive the car. They fall in love, right?
Right.
But then they sit with the finance guy for 4 hours. It's like a miserable experience.
Right.
And then they find out after they sit with the finance guy for 4 hours that they can't afford the car that they just drove around and fell in love with.
Right.
But they can afford a whole bunch of other property or a whole bunch of other cars. But they fell in love with this one house. Don't test drive your home. Don't go look at that beautiful house down the block until you sat with the finance person first. So in short, sit with the mortgage guy first. Let me help you identify what you can afford. Only look at homes that you can buy. You'll fall in love with plenty. I promise all of these homes will have a new home smell to you. I can guarantee it. But don't fall in love with the wrong house. Don't fall in love with a house that you can't afford and maybe your finances cannot get you. There's multiple ways and a lot of options with co-borrowers and 3 and 4 unit properties that can help you to afford these homes. But first things first, sit with your finance professional. Right. Make sure, hopefully me, make sure you get your loan approved, right?
But here's the thing. A lot of these finance professionals are going to tell you you can't buy those type of properties because you need to have all cash.
That's right.
So you said you had some products that would help with that process, correct?
Yeah, the rehabilitation loans allow you to buy properties that are normally all cash only. With a rehabilitation loan, you could buy a house and you can make it your dream home. You could live that HGTV experience in your own home and with your family. You can find a distressed property, remodel the kitchen, redo the floors, redo the windows, the bathroom, and the roof. Have a house, walk into it beautifully redone with a loan, with as little as 3.5% down. So you don't have to come out with this gigantic amount of money.
So wait a minute. Hold
Yeah.
on. Let me get this right. So I can buy a short sale.
That's right.
I can buy an REO.
Uh-huh.
I can pick up one of these properties with a mortgage.
That's right.
I don't have to come all cash. And you're telling me I only have to put down 3%.
That's right.
What
3.5%.
3.5%. So I don't have to do 20%.
No, not at all.
No,
not at all.
3.5%, and I can pick up one of these properties.
Yeah, matter of
That's
fact,
an amazing
it's
deal.
a federally insured loan. So these are tremendous loans that really make home ownership not even possible, but a really enjoyable experience. Imagine buying your first house right here in this beautiful neighborhood, right?
Right.
With all of the amenities that you thought you would never have ever. Getting a brand new home as your first house out the gate. Don't let the investor language intimidate you. Talk to your banker, get pre-approved, and it can happen. It can happen for a lot of people. There's a real big chunk of the market that is left out there for those people, and they just have to have a vision, have an eye, see a house. Don't be afraid to go into a project. They're fun.
Right.
They're fun, and we'll finance the whole thing for you.
Right.
So, you know, enjoy the process, really, and welcome to Brooklyn, right?
That's right. Welcome to Brooklyn.
That's right. So, you're with me. You've gotten pre-approved. You've done all the hard work. You've done all the homework. You've submitted your pay stubs, your bank statements, your W-2s, your tax returns. You did the dirty work, right? Mm-hmm. The unfun part. You got your finances in order. Congratulations. And now you're up, man. You're up to the plate. Right. What do? They take that pre-approval and say, I can get a loan now, Ernest. Help me find a home. What happens?
Well, this is the fun part, right? This is the part where you get to go out, you get to test drive the home, right? You get to go out and you see your property, you see what you're looking for, and you have to have a little bit of vision, all right? You have to have a little bit of vision, especially if you're looking at these distressed properties. You have to be able to see what it could be, all right? And then after that, the biggest piece that I find, Christian, and correct me if I'm wrong, is negotiations.
Yeah, I mean, that's where I think it goes wrong for a lot of people, right?
This is where it goes wrong for a lot of people because everybody's a negotiator, right?
Yeah.
Everybody feels they can negotiate. And they think it's like TV, right? Where I bid, you bid, we bid, we bid. It doesn't work like that in the real world, you know? It's especially in today's market, right? Because you got to remember, you're one of 40 people that are interested in this property.
Wow.
Right? This is what we were talking about earlier.
Yeah.
So the best thing to do in this process, in this point, is to put your best foot forward. Put your best offer in. Don't worry about negotiations, because are you going to let $20,000, $10,000 get in the way of you finding your dream home?
Yeah, I mean, certainly in the grand scheme of 500 and 550 and 600,000, right, to be in one of these beautiful neighborhoods. What is 10 or 20,000? $15 to $30 a month, maybe $50 a month. The last thing you want to do is fall in love with a house, and because you thought you were being some sort of, a court negotiator, right?
That's right.
You lose it for 20 grand because by the time you're going back and forth, they accepted an offer. The guy came in $550, really strong, and said and done.
And that's it.
So make your best
and
offer
over again.
That's it. I think that's the key, right? Make your best offer. Make it out the gate.
That's right.
Be comfortable with the home that you're seeing. It's going to appraise. Here's the thing. One last thing to remember about negotiations. You set a price that you want to buy a house for. Well, it has to still make value.
Right.
During the process, we're going to send an appraiser and make sure to confirm the value of the house. If it's not worth it, you're going to be safeguarded in the contracts that this house is not worth this number, so we have to negotiate. But at least by then, you're in a contract. The offer is accepted.
Right.
You've gained the house. You won the negotiation. Go out strong. It's really important. If you want to stand a chance in this market, make sure to make a strong offer.
That's right.
Don't wait for negotiations. You're going to lose.
I agree.
True indeed.
Cool.
All right, guys, so it's a wrap. We're done today. I just want to make sure that you understand. Use us or don't use us, but make sure you use our strategies, right? We're showing you real world applications, how to buy a distressed property, how to get approved for a loan, how to make a home your own, how to find that home within a really, really competitive market. You have us. We're the pros. We're available. Call, text, email, anytime. And make sure to tune in to any of our other videos where we're going to provide a lot of tips and tricks about the real estate market in this market. Very competitive.
That's right. And if you don't use us, at least use our strategies.
That's right. See you guys next time.